in the world economy. We're expecting to see a rebound in the Chinese economy. The growth for 2012 is probably going to come in higher than the government target of 7.5%. We're expecting to see a bit of a bump for the fourth quarter. Also, most people are talking about how this is just really going to set the stage nicely for the new leadership. We're expecting the new leadership to take over in March, and a lot of people here are saying that the leadership probably will not want to see a slowdown in their first year in office. That's one of the reasons why most of the estimates are for growth in 2013 for a faster growth of 8% or more. And another reason why people are expecting to see a better year ahead is just because we have seen so much money flowing into infrastructure projects and railway projects and road projects. And so people here are expecting that to really help lift the economy, at least for the first half of the year. Although, of course, Bernie, there are a lot of risks on the horizon.
Absolutely, and the fact that you say that, money alluded once again to that concept of pouring money into infrastructure, that is the litmus test there. How much of it is government-led? Is it too much government intervention in the markets that's driving these numbers? Stay right there, Eunice. Joining us here on Squawk Box today on this Friday is Freya Beamish, economist with Lombard Street Research. Freya, welcome to the program.
Thank you.
You would take you folks at Lombard Street are actually very consistent with taking a somewhat, I don't want to say jaundiced view, but a skeptical view about numbers from China. If you go from 7.4 to 7.8, and you can do a full year approach at 7.75%, things on the surface are getting better, but there are a lot of problems beneath the skin. And would what I just talked about, really a very heavy handedness on the part of the government, be part of that?
Yeah, we, on our numbers as well, so we have our own numbers for GDP, as you said, though we're slightly skeptical about the numbers that are published. On our numbers in Q4, we do expect a rebound in line with what other people are seeing, in line with the other data. But yeah, it is government-led. It's exports have helped out in Q4, December, and earlier in Q4, not so much in November, but exports have helped out there, and that's in and of itself pretty unsustainable given the global backdrop. But then also they're pulling the wrong levers. It's government-led, and that's leaning against this rebalancing that really needs to happen.
The anecdotal evidence in China is that after a couple of years of heavy-handedness, I use that term once again, on the property market, purchase and sales activity is starting to pick up a little bit. That would seem to indicate that consumer activity is picking up as well. That has to be a good thing, not necessarily a bad thing.
Yeah, I think consumers probably had not a bad year in 2012. If you look at how quickly wages were continuing to rise over that year, so in Q1 we still had 14% and then slowing down to maybe about 10% year on year by Q3, and we don't have the data yet for Q4, but wages still rising pretty quickly, and CPI inflation coming down very quickly. So for a lot of the year in the second half we were down below 2%. So consumers, in terms of just looking at their real wages, have done pretty well out of 2012. That is a positive thing. But the problem is that is a slowdown. We are seeing a slowdown in wage growth, and that's really to do with the broader kind of tight spot that the economy has got itself into with this profit squeeze that's going on.
Right. Eunice, say hi to Freya.
Hey, Freya, I have a quick question for you. I know that you are quite skeptical about the Chinese data, and recently we've been hearing even more skepticism from Goldman Sachs, from UBS, especially about the December export figures. They were talking about how the export figures didn't seem to match the import data that from China's trading partners, and also it didn't seem to match the good movements in and out of ports. The Chinese officials have come out and defended their data points, but I'm wondering if you think this year we might see more demands for clarity and transparency on Chinese data as China's economy continues to grow and China just grows in stature.
Yeah, I think really we do need more transparency. We've always had a policy of calculating our own GDP figures because the figures that are published by the authorities don't tend to have the extremes that you would expect in GDP. So we have our own measure of GDP which uses the official data, but when you kind of put it all together, it does have those extremes. So we saw kind of a lot slower growth in last year than were published by the authorities. So we had quarterly annualized growth in Q1 and Q2 of below 3%, which for China is a big deal and certainly not what was seen in the official figures. And then we have also these big inconsistencies in the data which just mathematically don't make sense. So you have national accounts data implying that the economy is inflating at 8% on an annualized rate. And yet, at the same time, this is in Q3, at the same time, we have PPI, which covers maybe like 80% of the goods in the economy, or up to 80%, deflating at 3%. So it's just mathematically inconsistent.
Freya, which is the most, I mean, everyone's concerned about the data in China, some more than others. I mean, which numbers do you look at as being the most reliable from that country? And then what do you add to it to get an accurate picture of what's happening with China?
Well, on an aggregate level, the nominal GDP, once you seasonally adjust it, does tend to have more kind of correlation with things that you would expect it to have. So what we do is to use the price indices and compile a deflator, and then use that to deflate the nominal GDP, and that gives us these extremes and a more kind of consistent pattern for GDP. So there are ways of looking at the Chinese data to kind of get an idea, but odd things come up, and you have to at some stage you have to make some guesses, but you can get a good picture of what's going on if you do that.
Freya, thank you so much for spending some time with us today. Okay,
Pleasure.
and do say hi to Diana Choi-Leva, your
she's
partner.
back on Monday.
That's right. Yeah, been out for a few months on maternity leave. That's great. I love it when people give birth to potential new taxpayers for our economy here. Freya joining us from Lombard Street Research. Eunice, it looks like on a clear day you can see forever, and I can see more than 50 yards behind you in Beijing. I think you've blown all that pollution into Shanghai, from what I understand.
Yeah, but you know, it's still incredibly cold this morning. It's minus 10 degrees. So because of that, there's a lot of coal burning. And in fact, earlier this morning, the cameraman, though you cannot see him, was wearing a mask because of all the pollution, because he could continue to smell the coal this morning. I, though, thought that probably wouldn't be a good look for television. So here I am breathing in the coal fumes just for you.
Okay, I'm going to send you a HEPA filter right away, okay? Because we can't have you breathing in stuff and wearing it at the same time.